to learn the skill set. So again, don't take this lightly. And you know, tonight, man, I'm just about to be real with you guys and just pour my all into what I have to share with you all tonight. So thank you again, Matt, for having me, and let's rock out, y'all. So let me grab some water real quick. All right, perfect. So first and foremost, my name is Ray Robinson. I'm actually living in Miami right now, and you know, like Matt said, I used to play professional basketball overseas, and I realized that the average athlete, they get to the end of their career and they try to figure out what's next in life. That's not what I wanted to happen for me in my life, okay? I wanted to be able to take matters into my own hand, be able to control my income whenever I wanted to, and not have to worry and be dependent on anybody else. So a skill set is something that you guys can learn and acquire over a period of time, learning from the right individuals, okay? So, you know, what I was doing playing basketball, guys, that was a talent, something that was God-given. You know, not everybody's blessed to be 6'4", 6'5", and be able to, you know, be as athletic as I was and get paid for it. So I realized that by me learning this skill set and being able to teach average individuals, just like you guys on this call, not saying that y'all are average, but, you know, just normal people, how to trade, you know, I was allowing myself to help other people win with me. So, you know, this is a people helping people business, and I'm about to pour my all out, you know, into this training for you guys. You know, when Matt hit me up, like I said, guys, I feel honored to be here. So, like I said, I'm just about to give my all and just keep it real with you guys when it comes to, you know, to training. So sometimes I get a little bit savage, you know, but that's what it takes, you know, for you guys to understand and grasp this concept. Because first and foremost, you know, before I actually dive into the charts, what I'm going to do, I'm going to talk to you guys about the mindset of trading. Before you sit down and talk to anybody, you know, when it comes to, you know, social media and all that stuff, you know, we make trading look sexy, okay? And for the average individual to see exactly what we're doing, and they come in here, they think they're going to get rich overnight. You know, this isn't a get rich quick, but it's definitely a get rich, okay? So understand that by following the right procedures, the right methods, the right training, you know, having a strategic plan and coming in this thing with the right mindset, guys. So understand this, when you approach the markets, and I'm going to talk about basketball a lot because I can relate basketball to trading and trading to basketball. It's pretty much the same thing. You're going to see exactly what I'm talking about. So, you know, when I was playing basketball overseas, you know, I didn't just walk into the basketball court, okay, and start shooting jumpers, shooting three-pointers and running and dunking. I had to warm myself up. I had to go out there, you know, stretch, do the proper things in order for me to build my body up to get to the level that I need to go out there and perform at my highest level. That's the same as that thing you guys need to do when you approach the markets when it comes to trading. You know, you have to put the time and effort into, you know, studying the basics. You guys know who Steph Curry is, right? Every time you see him before the basketball games, he's always doing a basic ball handling drills. Guess what? He mastered the basics. He doesn't do anything spectacular out there when he goes when he goes out there on the court. He's doing the basic stuff, okay? He mastered that. If you can master the basics in trading, you know, support, resistance, just the trend lines, just the basic stuff, guys, you can become profitable, self-sufficient traders, okay? You know, and when you see my charts, you're not going to see all these different indicators and all the little crazy stuff on my charts. Guys, I understand the mastering the basics is what got me to the level that I'm at right now. And honestly, what I'm going to show you tonight is the foundation to get you to the level you need to be at to be able to enter the market with the self-confidence that you need, with the confidence that you need, and teach you guys strategic plans when you approach the markets. So I'm not just shooting, you know, three-pointers when I walk out there on the court. I go right under the basket. And guess what I'm doing? I'm doing little 2-foot jumpers, let myself see the ball go inside that basket. You know, building up that mentality of constantly seeing that ball go in the basket, getting that rhythm. Then I take a couple steps back. I'm doing the same exact things, doing nothing but net. Now I'm at the free throw line, shooting nothing but net shots. By that time, I'm warmed up and I'm at the three-point line. And guess what I'm doing? I'm draining jumpers left and right, left and right. So when I approach the market, guys, that's the same as that thing that I have. I bring that same mentality to the markets. I'm not coming into markets and trying to, you know, do things out of my league. I'm approaching the markets with the right mindset. Because when I was playing basketball, my coach always told me this. He said, when you approach the market, when you approach the gym, come in here with the right mindset. Leave all that stuff that you have out there in the outside world. Leave it at the door before you walk into this gym. Because when you come in this gym, guess what? You have a job that you have to accomplish. That's the same as that thing you have to do when you approach these markets. Some of you come to the markets and, you know, you're sitting at your computer with a negative mindset. because of whatever's affecting you out there in the real world, whether it's relationships, whether it's people doubting you, whether it's your job or whatever it may be. Guys, leave all of that stuff out the door. Come here with a clear mind. Whatever you got to do, listen to personal development, whatever you got to do to focus, go to a park, in a beautiful scenery, somewhere you can go and clear your mind and focus for a certain period of time so you can get the job done that needs to be done. And our job is to come here and make money in the markets. That's what our goal is. That's what we're here for. So how are you going to be able to make money with a negative mindset? That repels money. So guess what? You all have to come here with the right mindset, right mentality, and just leave all that negativity at the door when you approach the markets. And I guarantee just that little psychology part right there will help your trading increase to where you need to be. So approach the markets with the right mindset. And, just to let all the newbies know on this call, guys, you can't come in this thinking you're going to get, this is like one of my biggest pet peeves. So a lot of people approach the markets, right? And they say, my goal is to get 50 pips per day. Now, let me ask you this. What if you approach the markets and you don't see your strategic, your strategy or your strategic plan? What if it doesn't fit that trade setup that you see doesn't fit your trade criteria? Are you still going to take that trade? Guys, don't approach the market with that mindset that I'm going to make 50 pips a day, okay? You need to approach the mindset that I'm going to make 50 pips per trade. I'm going to make 20 pips per trade, 30 pips per trade, whatever your goal is. If you come here thinking you're going to make 30 pips per trade per day, guys, you're going to start seeing things in the market and you're going to start trading things in the market that you shouldn't be doing, right? And that's not what you guys want to be. That's not what you guys want to do. That just changing that little aspect and that little lingo from taking 50 pips per day or 30 pips per day, whatever your goal is, and changing that to 20, 30 pips per trade. That right there is going to enhance your skills, because now you're looking for your strategy that fits your trading plan, and you're not coming in here just looking for stuff, throwing stuff at the wall, hoping that it sticks. So just being able to come here, tweak a little things when it comes to the mentality aspect of trading can help you take it to that next level. Now, what you guys got to understand is this too, is that this is a marathon, okay? It's not a race. A lot of people try to, place these, humongous lot size and, they're just trading out of their league. Guys, you got to understand this. Compounding money is power. It's powerful. They say that's the 8th wonder of the world, compounding money. Okay? That is very, very powerful, guys. You got to understand, you can have a small account and grow that account massively just by using the proper risk management and understanding what you're doing. The only thing is that, I love the 8th wonder of the world. The only thing that's keeping a lot of people from being successful is their mindset when it comes to trading. That's the only thing that's really keeping a lot of people from being successful. They can't control this up here. They try to get rich overnight. Some people, I was talking to a couple the other night. I was prospecting them, and they hit me up and they was like, I need to make, $15,000 by the end of July from $1,000. And I told them, I'm like, listen, if you come here with that mentality, you already shot yourself in the foot. You already lost, because you're not coming in here with the right mindset with that longevity. Okay. So don't come here thinking that, that you can get rich overnight with this just by doing the wrong methods. Guys, understand this. Time is going to pass by anyway, so you might as well do it right the first time. And I learned that when I first got started trading. Looking back, over my trading career, had I did everything right the first time around, things would be a little bit different right now. So time is going to pass by anyway. So guys, you might as well do it the right way the first time around. So what I want to do is I want to go ahead and I see Alex say you got to love the process. Absolutely. You definitely have to love the process. So I'm just about to do a little screen share. I'm about to dive into my charts right now. And let me minimize this. All right, cool. Let's go. So what you see on my chart right now is a blank screen. Now, I'm just going to go over some basic stuff that I use when I trade. And everything rises and falls on support and resistance in the market, okay? That's like the foundation when it comes to trading. So if my computer starts to lag because my Wi-Fi is like kind of funky right now, just post it in the chat and let me know. But I'm not going to let that stop us, but check this out. So everything rises and fall on support and resistance. So check this out. So we got two lines right here, okay? The market moves three ways, okay? The market goes up, the market goes down, and the market consolidates. Yeah, I don't have any candles on my chart right now. I'm going to get into that in a little bit. The market goes up, down, and it consolidates, okay? This is how the market moves. It goes up, creates a level of resistance in the markets, boom, it comes down, create a level of support. Guys, check this out. In order for a trend line to be valid in the market, it has to hit 2 or more points. This is the first time it hit right here. This right here is the second time that it hit. Now this trend line is considered valid. Now, just because I have the trend line drawn right here on these first 2 points right here, doesn't mean I am not going to just leave my trend line, cut my trend line short and leave it right here. What I'm going to do is extend my trend line all the way into the future, because what happens is every time price reaches that point, it's going to react some type of way. And history always repeats itself in the market. You just have to pay attention. Now, here's the thing. Price is pushing up, boom. This is now a valid trend line. 2 or more points hit right here. 1 time right here, 2 times right here. Valid trend line, okay? Now, you know, there's a difference between investing and trading. It's a big difference. Investing is when you take in other people's opinion, you know, when it comes to like Bitcoin, for example. Those people invest. What we do here is we trade, okay? So it's a huge difference. When we trade, we understand the markets and understand how the markets move. Again, investing is people, you know, taking other people's opinions. They say buy Bitcoin, you go and buy it. That's what it is, okay? So I'm gonna give you a prime example with Bitcoin, because matter of fact, let me backtrack a little bit. So almost always when the market comes back here to this trend line, like I said, it's going to react some type of way. Almost always you can look to place in this area right here, which is a level of support. You can almost always SUP for support, RES for resistance. S for resistance. BTC, yeah, you for it. Yep, absolutely. So almost always you know price came down, hit this level of support. Almost always you can anticipate the buy the market off that third touch. Now, the more touches on this trend line, the stronger it's going to be. Price came up, boom. Now, this is what happens, okay? Price will then break out of this zone right here. And you guys know what double dutching is, you know. That's kind of how it is when we're trading, right? Especially when we're nervous and we're scared, right? We see price break this trend line right here and we're like, oh shit, should I get in that trade? Should I not? Should I get in? Should I not? Boom, it makes another push to the downside. They're like, damn, I'm really missing this trade. And it makes one more push to the downside. And this used to be me right here. I used to get the perfect wick entry going the opposite direction every single time. Why? Because I didn't have patience. Guys, understand this. We get paid to be patient. We don't get paid to just trade, okay? We get paid to be patient. We don't get paid to just trade. This used to be me every single time. And I'm sitting here wondering to myself, I'm like, wow, how am I getting the perfect wick entry going the opposite direction every single time? I just didn't understand. But guess what, guys? One thing that I learned is that by being patient, I was going in the right direction now. But one thing is, me being patient, all I had to do was wait for price to make the real move in the market, okay? So again, this right here is my level of support. Now, what was once my old level of support, now comes my new level of resistance, okay? My new level of resistance. Price now pushed back up into that zone and retested these levels back here, which I call structure. And I can just highlight these real quick. And this right here happens every single time in the market. I'm going to show you on live charts as well. So you guys don't think I'm bluffing or anything like that. So check this out. So this is what we call structure. Price will then Price will break out of that structure zone, push to the downside, faking a lot of people out. Let me see. Patience pays, yes, absolutely. Faking a lot of people out, and it'll push right back up into that structure zone. If you ever get lost in the market, just look left. Okay? Always look left and trade right. Price push back up into that zone, which is now my old support, which is now my newfound resistance right here. And this is the real move to the downside. That's the real move right there that you guys should be following. So don't be making these rookie mistakes when price breaks out of the structure zone and start chasing the trade and get caught the perfect wick entry going the opposite direction. Be patient and let that trade develop, and then enter the trade with confidence. This is the Bitcoin people down here that bought at $20,000. They're sitting up there looking crazy right now, right? Don't be the Bitcoin people, guys. Don't do that. This is what you're gonna. This is you right here. Okay. Now you guys know better. Know not to chase trades, because when you start chasing trades, that's when things start getting ugly for you. You start slapping your computer around, saying this Forex thing don't work. But if you were just a little bit patient and let that trade develop, you would have caught that move to the downside. Now, guys, you got to understand this. This is just basic stuff right here that you guys are getting right here, and I'm going to show you exactly how this right here, how you can implement this when it comes to trading. Now, here we go. We have two different types of trend lines. We have horizontal trend lines and we have diagonal trend lines. Okay, the same concept applies when it comes to diagonal trend lines. A diagonal trend line is this right here. This is the diagonal trend line, okay? I'm going to draw it up real quick and show you guys how this works. Price is making waves to the upside, okay? Making waves to the upside. And what I would do, as soon as I start seeing price create a level of support, every time I see price create a level of support, I'm always plotting it on my chart. Every time I see price create a level of resistance, I'm always plotting it on my chart. Now check this out. This is my starting point right here. I would take my trend line and connect these points. Now this right here, this is a valid trend line because it hit 2 or more times, right? It hit one time right here. It hit a second time right here. It hit, yeah, trade. Yeah, this is trading view. If you use MetaTrader 4, please switch to trading view. This right here is just better. Me and my guys get into arguments all the time when they use a MetaTrader 4. So it's like talking to vegans, honestly. So check this out. When you're trading, the diagonal trend line, it's the same as that thing. 2 or more times on two or more touches on the trend line is a valid trend line. But guess what? I'm not going to just put my trend line and just stop it right here. I'm not just going to stop my trend line right here. I'm going to take my trend line and I'm going to extend it all the way out to the future. Because like I told you, something's going to happen once price comes here and price reacts some type of way once it hits these trend lines. And then eventually what will happen is price will then break out of that zone. And it's the same concept, same exact concept as this right here. Boom, same exact concept. Price push back up into the structure zone right here for the last kiss to the downside. Same as that thing right here. Price will push back up one more time for that last kiss, boom, to the downside. So it's the same as that method, okay? The only difference is this is a horizontal trend line. This is a horizontal trend line, and this is a diagonal trend line. Okay, that's the only difference. So now let's go to some charts and let's mark up some charts real quick. So I want to, just show you guys my little artwork. Now we're about to mark up some charts real quick. Let me delete this. All right, let's go. Guys, also when you're trading, you probably heard this before, but I'm gonna say it again. Trade from the highest time frame and work your way down. Yeah, my computer's starting to act slow right now. Okay, the higher the time frame, the easier it is for you to become, you know, for you to, it's easier for you to see your charts. The higher the time frame, the highest time frame I start with is the date with a 4-hour time frame. I mainly trade off the 4-hour and the 1-hour, and then I look for entries on a 15-minute chart. So looking at this, matter of fact, what I'm about to do right now, I'm about to go over some of the pairs that I took this past week. GBP AUD. I'm going to show you guys exactly what I'm talking about. GBP AUD. This is one of the trades that I actually took last week. I'm just going to mark. Yeah, you can see my charts right here. You can see how I had it marked up and everything. Basically, everything that I showed you guys right here, you know, trend line, boom, price broke, came back, retested, dropped, came back into the zone, dropped, retested this trend line right here, boom. So I'm about to break all this stuff down to you guys real quick. And like I said, you don't see anything, you know, no indicators on my charts or anything like that at all. So here we go. Let's go. Let me delete all of this stuff off my chart. Why the 1-hour, 4-hour, and 15? Because when I'm looking at my chart on a higher time frame, I get an overall view of the trend. Because if I'm looking at the 1 minute chart, those candles are moving 1 minute. They're changing by the minute. So right now it's 9:32. So at 9:33, there's going to be a new candlestick that develops. So looking at a 1 minute chart is like, it's like reading the first page of a book. If you read the first page of a book, guess what? It's not going to tell you the entire story. So you want to look at the overall trend by analyzing the higher time frames and kind of getting an idea of what's going on. So if I'm looking at the 4-hour chart right now, I can see that this is clearly in an uptrend. Prices continue to make higher highs and push into the upside. Okay, so when I'm looking at this market right here, check this out. So I'm going to start right here. I see price push up, price came right here and pushed down. Price made it push to the upside, pushed up even higher. So like I say, I like to plot these trend lines. I like to plot these trend lines and leave them there. And let me bring this down some. There we go. Another thing that you guys can do is when you're looking at your chart and it looks like it's a lot of noise on your chart, you can just switch from candlesticks and turn it to a line chart, and it'll make everything a little bit more easier, so and a little bit more clear for you to see. So you can see how now it's not that much noise on my chart, and you can see a little bit cleaner. And honestly, what I can do is pull this trend line down and connect it right here. But what I'm going to do is I'm going to show you exactly what I do. So I'm going to turn this back to candlesticks real quick. How do you differentiate when to use a line mark? To use a line to mark a valid support resistance. So I'm about to go over that right now. So soon as I see price push up and drop right here, boom, I can drop a trend line right here. This is an obvious level of support right here. So this is what I can do. I'm going to drop that trend line right there for you. This is an obvious level of support right here. Okay, obvious level of support. Price pushed up, boom, pushed down. Now what we have right here, I'm just going to follow the market from this point right here. Price then pushed up. Here's the level of resistance right here, okay? So I'm going to drop a trend line right there. Now, mind you, everything to the right had none of this happened yet. I'm just focused on this little push right here, okay? So don't get ahead of yourself. So I'm going to place a trend line right there on this level of resistance. Boom, right there. Okay. So now looking at this right here, I see price actually pushed up a little bit higher. Price drop, pushed up a little bit higher. So this is where I put my trend line right here now. So what I have right here, and here's another thing that, you know, a lot of people, this is another reason why people get killed in the markets. And what I'm going to do is I'm going to take this right here. This is called a zone right here. Okay. This is called a zone because price, matter of fact, hold on. And I'm going to take it. I'm just going to drag it all the way across like this. Well, I'm not going to go that far yet. I'm just going to take it and drag it all the way across, extend it out into the future. So this is what happens with people that trade, okay? They get so caught up and focused on getting the perfect wick entry. You know, I'm pretty sure you all have people like that in your groups and stuff like that. They always get the perfect wick, they try to get the perfect wick entry. You know, they brag about it and stuff like that. Guys, you don't have to get the perfect wick entry. All you have to do is get the perfect direction with the proper risk management, okay? That's it. So you can see how price pushed up right here, and then price made another push to the upside. So I'm going to set my trend line right here. I'm going to set a trend line right here. Now this is considered a zone. So now this is a higher time frame, right? So every time price pushes up to the zone, you can be placing sales out of that area, out of that zone, and then eventually it broke out of that zone. So you could have caught multiple sell opportunities when price bounced off of this trend line before that, you know, while it was retesting. It retested it one time right here, two times right here, a third time here, four times, five times. This right here was a strong trend line, okay? So you could have been placing sells off of this move right here to the downside. Or you could have been placing buys since this was current, you know, since this was an uptrend. So looking at this right here, price then broke out of this zone. As soon as I see price push up to the upside, guess what I'm going to do? I'm going to take my trend line. I'm going to place my trend line right here. Now this right here is considered my level of resistance. And price started to consolidate in the zone right here. And what I'm going to do, let me zoom in so you all can see. So now check this out. Now I have a zone. Price pushed up. Let me erase this over here. Price broke out of this level of resistance, okay? Now, ideally, what I would have done is if price would have came back here into this zone, I would have waited for the retest and placed a buy and caught that move to the upside. So it's clearly, you can see that the price never pushed back into this zone, right? So guess what? You're not going to trade it. You're just going to sit here and be patient and wait for that move to actually happen. So price pushed up, created a level of resistance right here. And then price came down and created a level of support. Now, like I said, this is a zone right here where price is now consolidating. And then you can see that price then eventually broke out of that zone and pushed to the downside, and look where it came. All you have to do is look left, okay? Let me erase this. Look where price came. Price came right back into this zone over here. And that's why I say extend your tools all the way into the future, because something's going to always happen when price comes up, when price comes back to these levels. Price then broke out of this zone, fell into this level of support and bounced up, and look where price came right back to when it bounced up. How do you okay, all right, see that. So price then pushed to the downside, came right back up. All you have to do is look left. This structure right here that you guys see. Price came right back to that structure, then it dropped. This is the 4-hour chart. So these moves right here are pretty big if I go down to the lower time frame. Now, this is where I want to show you guys what I saw in the market, okay? So this is what I saw in the market. So I have this level of consolidation up here. Price then broke out, came up here, retested, boom, drop. Now, this is the thing. Like I told you guys over here, price did not retest this zone when price broke out of that zone. When price broke out of this structure over here to the left, right here, when price broke out of it, there was never a retest. So for the fact that there was never a retest of this zone, I wouldn't have traded it. Look what happened. The same exact thing right here. Price broke out of this zone and continued to drop. But guess what happened? There was not a retest. So guess what? I'm not going to trade it. Price then decided to make his way back up and retest into this zone. So if I take this blue box right here, this zone right here, and extend it out into the future, look what happened when price pushed up into the zone. Again, all you have to do is look left. Price broke out of that zone and it came right back up and created and retested this level of support over here, this old level of support, which is my new level of resistance. So let me take another trend line real quick and show you guys. And I'm going to take the average of these 2 points right here. That's another thing that I do when I'm trading, and I'm looking at let me delete this real quick. This is another thing that I do when I'm trading is I take the average of 2 points. What do you use to base your support and resistance lines, Fibonacci levels? I haven't gotten to the Fibonacci yet, but what I use to base my support and resistance lines, again, it's just following the market. So you can see price pushed down, boom, look where it came to, that level of support. Price pushed up, guess where it came right back into, that level of resistance. This right here is my old level of support right here. Price then broke out of that zone right here, came right back and hit that new level of resistance. You see that? This right here is the new level of resistance right here. So all I did was place, when price came up here, created that level of resistance, I placed my trend line. As soon as price came up here and I seen it to stall, I saw price started to retrace. Soon as price started to retrace, I placed my trend line up here and I left it there because I knew that once price comes back up here, something's going to happen when price reaches this trend line again. Price then dropped and pushed to the downside. Guess what happened? I placed a trend line right here because I knew sometime in the future, price was going to come back and retest it. And something was going to happen there, whether it was going to retest it and continue up, or it was going to break, retest, and continue down. Something was going to happen on this trend line right here. So as you can see, this is now my new level of resistance. This is my new level of resistance. Price then came down into the zone, boom, pushed up, and it dropped. It broke out of that zone. In order for a trend line to be broken, it's going to take a big, strong candle to break these trend lines. Like you can see this candle right here, this big, strong red candle right here. This big green candle right here. This big red candle right here. It takes a big candle to break these trend lines, okay? So looking at this right here, looking at this point right here, and this point right here, this is my last level of support. So what I'm going to do, what I do with this, like I told you guys, I'm not looking to get the perfect wick entry every time I'm trading. What I'm looking for right now, that I see these 2 points, I'm going to create a zone because I already have this trend line right here from my previous structure back here. Okay, I'll show you real quick. From my previous structure right here. So this trend line is already established. Price then came down and it made indecision. it started overlapping this trend line right here and creating new lows. So what I'm going to do, I'm going to take So what I'm going to do is I'm going to take the average of these two moves right here. So that means I'm going to take my trend line and I'm going to pull it up until they both touch. Now this right here is considered the zone right here. And I'm going to take my blue box. And I'm just going to extend it all the way out to the future, because I know that this right here is a key level in the market and something's going to happen when price reaches this level. So like I told you guys before, when price started to make these lows right here, I'm just going to take the average of these 2 points right here, these two lows, and now I'm going to create a zone. And look what happened. Price broke out of that zone. And when price broke out of it, it created a level of resistance, support down here. This is the trend line from earlier. So what I'm going to do, I'm just going to create another zone. And I'm going to leave that right there, because when price comes back into this zone, I'm going to be looking for buying opportunities. So price broke out of this structure, came here, created a new low, which is my new level of support. And look what price pushed right back into. All you have to do is look left. The structure is always going to leave clues for you. Look left, structure leaves clues. So price pushed back into that zone, which is my old level of support, now becomes my new level of resistance. Old level of support is now my new level of resistance, okay? So when I was over here looking at all of this action over here going on, let me get my eraser. So while I was over here looking at all this noise over here, waiting for it to completely drop, I was catching moves inside this range right here. And here's a move that I caught last week. Just something simple. So like I told you guys, price then pushed down right here, created a level of support, pushed up, boom, came right here, created a level of support. I'm going to take my horizontal trend line now. I'm just going to connect those 2 points and extend it out into the future. Connect these 2 points and just extend it all the way out into the future. And what I'm going to do right now is go down to a lower time frame now. Let's go down to the hour time chart. So look what happened. I have this trend line right here drawn out. Let me line this up perfectly. I like to draw my trend lines wick to wick, and I like to get surgical on the charts. I try to be precise as possible. So as you can see, price then pushed up, came back, hit it one more time, then boom, hit it again and started to consolidate. Now, this right here, you see this big gap right here? This right here is because this is why they tell you don't hold trades over the weekend also. This happened this past weekend. The market's open and they gapped up. Sometimes I've seen gaps big as 100 pips. This one was, rather small, but I've seen some big gaps in the market, right? So What happened was price gapped up and it came down and broke that trend line. Again, remember what I told you guys. When price break this trend line, don't go chasing the trade. Wait for price to push back up and retest the backside of that trend line. And this is where you enter for that sell and catch that entire drop. This is the real move right here. That's the real move, not this one. This is the real move. Some people see price break out like this, and then it sucks them back in. Okay, don't fall for that stuff right here. Wait for price to make his move, come back and retest it like this. Let me erase this so you all can see. Wait for price to come back and retest the backside of that trend line for the last kiss to catch that move to the downside. This is the real move to the downside right here. And now, let me see. Now you can see how price is starting to react once it gets to the backside of this trend line right here again. So right now, honestly, since I met my goal for the week with trading already, and I see price push back up into this zone, I'm not going to go chase this trade and try to catch more pips in the market. I got my profits already secured. I already met my pip goal for the week. So my job is not to continue to trade. My job is to walk away and go study. So once you met your trading goal, that's what you guys need to do, is walk away, go study, you know, your strategic plan, and or go have fun with your family, or whatever it is that you guys do. Don't just sit at your computer and just stare at it, because what's going to happen is like you're going to get that you're going to start over trading. You're going to start gambling in the markets, thinking you know, because you're on your high horse, you know, you caught a couple hundred pips, you know, and it's only Monday, and you feel like you need to trade the rest of the week. No, secure your profits and walk away from it. So as we see price is right now retesting the backside of this trend line right here. What I'm going to do is just be patient and wait and see what's going to happen. Because I see that the market broke these lows over here. So overall, I'm still looking for a sell. I'm actually expecting the price to push all the way back up into this zone and make another push to the downside. So this right here would be considered another retest up into this zone. The one thing about this pair also, and you guys should also, you know, study your pairs and again, set goals and targets in the market, right? Because what I found out about GBP AUD is one of the fastest moving pairs out there. It'll literally drop a couple hundred pips, and later on in that same day it'll recover. And now if you would have entered the trade right here, you would have had the perfect textbook trade, but because you thought it was going to drop to hell, you held that trade and it recovered, and now you're back at square one when you should have secured your profits on the way down. And I had to find out the hard way when I started trading this pair, because this is a fast moving pair right here, GBP AUD. It'll literally drop a couple hundred pips and then recover the next day. So this is one trade setup that I had. I'm going to go over another trade setup. And another thing is, you know, my trade style that I trade, I like to trade harmonics in the market. I like to trade harmonic patterns in the market. And this right here is honestly a harmonic pattern also. It's a little bit advanced, but I'll show you guys exactly what I see. I'll show you guys exactly what I see. I see price push to the upside. And like I told you guys, everything stems from support and resistance. This right here is a level of support. This right here is a level of resistance. Price then pushed down and created another level of support right here. So what I would do, I know somebody asked me about Fibonacci earlier. So what I would do is take my fib. I'm going to show you, I'm just showing you what I do real quick. I'm going to take my fib. And I'm going to fib out this level, this high. I'm sorry, that level of support. all the way up here to this level of resistance. And I see that I have a minimum of a 78.6 touch right here, okay? Now, that 78.6, each one of these fib lows, the 38.2 to 50%, 618, 786, 886, they tell me something in the market. So I see price pushed up, create a level of support, and these are the 2 points that I'm fibbing out, 0.1 and 0.2. And I'm just waiting to see how far the market pulls back. Boom. It pulled back to this minimum 786 that I would be looking for. It came down and hit the 886. It's perfectly fine, but looking for that minimum 786. And then the market pulled back without breaking above these highs over here. And then the key level that I'm looking for is this 1618 level right here. And I'll be looking for that for a buying opportunity. Then price then pushed down, hit that 1618, and it created a nice crab pattern right there. And for the fact that I was in tune with the market and I know what I'm looking for every time I enter the markets, guess what happened? I was able to catch that move both ways, okay? And again, like I told you guys, that's a little bit more advanced. But I'm just going to show you guys what I saw in the market. This X leg to A leg to B leg, C leg, all the way down here to the completion of this move, which is at the 1618 level, the D leg, and caught that move back to the upside as well. You know, if you guys aren't utilizing that harmonic scanner, definitely learn it, guys. It's powerful. So now I'm about to go over another pair real quick that I had marked up, and a trade that I took this week also. I'm also curious about using moving averages. How do you use them when trading? I honestly don't use moving averages. I just have them on my chart just because. But it pretty much tell you the moving averages acts as if it's support and resistance also. You can see how price shift down, boom, came up, drop. So they act as if they're support and resistance levels anyway, right? So let me see something real quick. All right, cool. So now I'm about to go analyze one more pair real quick for you guys. XAU, USD. How many people trade gold? Nice. One thing I do, if you guys scalp, is to look for two fill levels up or down, depending on if you're shooting shorting or longing. All right, cool. Check this out. All right, here's a gold trade that I took. I actually got in this trade. Saw this set up last Friday. All right, let me delete this real quick. And like I told you guys, everything starts from support and resistance, everything. So if you can master support and resistance, the basics like Steph Curry can master, dribbling a basketball, just doing basic fundamentals, you guys can become profitable traders. Support and resistance is everything in the markets. So check this out. So gold made a nice little rally to the downside. You know, a lot of people were trying to, catch the reversal. Instead of trying to catch a reversal, you guys should have just been going with the trend, really. And I had to learn that the hard way when I started trading also. But this is what I saw on gold, right? I saw this nice little impulse leg, right? Nice impulse leg to the upside. Again, everything starts from support and resistance, right? Everything. Okay, perfect. Yeah, everything starts from support and resistance. This level of support down here, this level of resistance, okay? That's where everything starts from. Now check this out. This is what we call a flag pattern. These are patterns that happen all the time in the market. Price pushed up, boom, create a level of resistance, and then it started to move sideways. See how the market is just moving sideways right now? Like it's at a slant. And you see how the market is moving sideways at a slant, and then boom, drop. Sometimes if you pay attention to the market will make these little wedges like this, and then boom, it'll drop. If it's making a wedge to the upside, almost always, you know, it starts to look like it's funny, like a little golf wedge or whatever. You like, especially if it's moving up, you can almost expect it to drop. And if it's moving, you know, slanted like this, like you see right here, you can almost expect it to rise. So this is what we call flag patterns right here. And these happen all the time in the markets, you know, different time frames, it don't matter. You can catch them on anything. But price then created a level of support right here. Price came down, created a level of support. And then price pushed up and created this level of resistance up here. Okay, so when I'm looking at this right here, let me zoom in some. When I'm looking at price right now, I see price start to create this little wedge right here. So I see this level of resistance, and I see price fails to break this high point over here. Price came up, fell, came up, failed, came up, failed again. What I'm going to do is take my diagonal trend line, and I'm going to connect these points. And I'm just going to extend it all the way out into the future. Connect it with the wick. And my goal is to wait for price to break out of this little wedge right here and catch a retest on this and for the continuation to the upside. So this is what I did. I had this marked up. This is what? A level of resistance, okay? Now, mind you, everything to the right didn't happen yet. Everything was just sitting up under this trend line. Price came up, dropped, came up, and it failed to break it. What happened was I went down to the lower time frame, to the 15-minute chart, and I waited for this move right here to develop. So here we go. Price is just respecting that trend line, right? Price respected it right here. Price respected it right here. And then it finally broke out of that zone. And look what happened. It started to dance along the backside of that trend line. Wait for the break and retest. This was the retest right here of that trend line before you catch that move to the upside. Now, I had a little advantage also because, like I told you guys, I trade harmonics, okay? Now, what I see right here, is a nice harmonic pattern. So I actually had two entries on this trade. I had an entry right here, and I had my other entry right here for the buy. And this is what I saw. And why everything stems from support and resistance. This is my level of support. And again, everything right here to the right didn't even happen yet, okay? My level of support, my level of resistance. I'm going to grab my fib tool. And I'm just going to measure this out. Take it from this low all the way up here to the high. And I'm just going to wait and see. I'm just going to, hold on, let me get this straight. I'm just going to wait and see how far price pushes down from this point and see where the retracement comes. And we can see that it hit a 61.8 retracement, okay? Now, Let me extend this out so you all can see. It hit a 61.8 retracement right here, this zone right here. And then price pulled back without breaking this high point. If I measure this level out right here from here to here, that'll probably give me an 88.6 level. Like I said, that's just advanced. I'm not going to really dive too much into that, but I just want you guys to get a clear view of how everything, the basics of trading is really comes from support and resistance. If you can identify those levels, you guys will be golden. And then I took my fib level again, and I took it from this high point. My bad. I took it from this low point back up to the high point right here. And I'm looking for a 1272 level. Hold on, let me take it this way. I'm looking for a 1272 level to enter for a buy. And look what happened. I took my fill from this level to this level, and I waited for price to push down to the 1272. And look what price did. It hit that 1272 level right here. So this was my first entry on the trade for gold. Price pushed up, came back down. This right here is also another harmonic pattern right here. Within that, I'm not going to go over that, but this is another harmonic pattern. This right here was news on Friday for NFP. I was expecting price to break out of that zone, retest, and continue to the upside, but it didn't. So I had to be patient and wait for price to break out of that zone. And this is what we have right here. On 2 seconds. How do you determine where to apply a stop loss point or buy based off fibs? My stop loss would have went below this last low right here. This is my starting point, right? So my stop loss would have went below there, at least 20 pips below. So I would have had breathing room just in case the trade went against me. And if it went against me, I wouldn't have lost much because I had a tight little stop loss. But with this, like I say, this right here is a harmonic pattern also. And these things happen all the time in the market. These moves happen all the time in the market. This is my entry point at 1272, and this right here was this is what it actually looked like. Grab my patterns. X to A to B, B to C, C to D. And this is a Gartley pattern actually, guys. Like I told you guys, go through the academy, you'll learn all of this stuff right here. And caught this move to the upside right here, which went on for like a couple hundred pips, if I'm not mistaken, about 200 something pips, just off of this move right here. So again, this was the first entry. This is the second entry right here. And again, I didn't do nothing special. Just basically support and resistance, okay? This white trend line. Waited for price to break out of that zone, come back, retest it, boom, catch the move to the upside. Just simple stuff. So again, I challenge you all to go to your charts, start on a daily time frame, and work your way down. So pretty much doing top-down analysis. But and just marking key levels of support and resistance, just like obvious levels. Like for example, this will be an obvious level of resistance. These 2 points right here, I would take the average of these 2 points. So I would have a trend line right here and the trend line right there, taking the average of these 2 points and just extend it all the way across. Look what happened. Well, it's not a perfect trend line. Price broke up, came back, retested that trend line, boom. Price broke that trend line, came back, retested the backside of that trend line, drop. Price created a level of support, came up, hit the backside of this trend line, drop. So you can see how something always happens once price hit the touches these trend lines. Now, I think everybody and their mother was in a buy on gold yesterday or a couple days ago. Once price broke out of this zone right here, price broke out of the zone, came back and retested it. Everybody and their moms was buying off of this trend line. Boom. They were in profit, then it just tanked against them. It just went against them. I was in this too. I actually got back in this trade right here. Entered right here off the backside of this trend line because honestly it was a textbook setup. It was definitely a textbook setup. It broke out of that flag pattern, created a level of resistance, pushed to the downside, boom, gave you a nice buying opportunity. You could have caught some pips off of that move, but then next thing you know, we woke up and that thing was all the way down here like when we woke up. So yeah, yesterday, yesterday, bro, it was crazy. Now, how would you go about avoiding something like that? Use proper risk management, because honestly, if you're in a trade and you're not using proper risk management and you enter that trade and you can't breathe, then your lot size is too big, bro. You got to be able to use proper risk management where you can be honestly. Sometimes when I'm in a trade, yeah, with a stop loss, you can put a stop loss too. Like for instance, if I was in this trade right here. If I was in this trade and I entered right here, my stop loss would have been below here or below one of these lows over here. That's where my stop loss would have been, because I was honestly expecting gold to push up into this zone up here. I'm gonna show you real quick. Let me go back to the hour chart. And I'm gonna show you the tool that I use when I am when I'm trading flag patterns in the market. So the tool that I use when I'm trading, let me delete this harmonic pattern real quick. So the tools that I'm using when I'm trading flag patterns is called the Fibonacci extension tool. So this little tool right here, it's the same as Fibonacci. So I would take my tool from, I would take it from the low point right here to the high point, that level of resistance, support to resistance, all the way back down to this level of support. So if I would have entered the trade right here for a buy on the retest right here, if I would have entered that, my target would have been this 1272 level right here. Price failed to hit it, but this would have been my original target right here. This 1272 level right here, based off the flag pattern using the Fibonacci expansion tool. But that's a little bit advanced also. So I have to come back and do another training and everything, doing some, harmonic trading and stuff for you guys. But yeah, like I said, guys, support resistance is basically all you guys need to really be successful when it comes to trading. Level of support right here, boom, level of resistance up here. Level of resistance right here. Let me fix this real quick. My computer lagging again. Crap. Level of resistance right here. There we go. Price broke out, created a new level of resistance. Look left. Where do you see price went? Price went right back to this structure over here, right? And look what happened. Price then broke that trend line. Price broke this trend line right here. I took the average of these two right here. The average of these two. Price came here, broke that trend line. Look where price went, right back to the back side of this trend line. Price then retested the back side of this trend line, and then it dropped. It broke this trend line, continued to drop, recovered, came right back, retested the back side of that trend line, and dropped. So you see, you guys see how powerful just understanding the support and resistance and staying in tune with the market really is. Does anybody got any questions? Yeah, absolutely. Yeah, it's a lot to track. Yeah, like I can be on it. I can stay on this thing all night with you guys if y'all want me to. I don't care. You know, it's a lot that definitely go over and cover. But like I told you guys, understanding just the basic stuff like that, just mastering the basics, you all can be successful when it comes to trading. I'm still pretty new, so I'm just observing and soaking it all in. All right, perfect. How many pairs would you recommend keeping an eye based on your experience? So based on my experience, honestly, bro, when I trade it's like we're playing basketball, right? I don't have a favorite basketball team. I have favorite basketball players that I like to watch. It's like trading Forex. I don't have a favorite pair that I like to trade. I have a favorite pattern that I like to trade. So I can look for different patterns on different pairs, and every time I see that pattern, I'm going to trade it. Like I say, I strictly trade harmonic patterns, and that's it. That's basically all I trade is just the harmonics. And then if I see something like breaking retests of a trend line, I'll jump onto that. But my main strategic plan that I look for is harmonics, and I have my notes and everything right here that I have next to my computer, and I just check everything off as I'm analyzing my charts. Okay, this point right here matches this point, check. Now I'm looking for my next confirmation. That matches that, check. Okay, now I got my next confirmation. This right here matches that, cool. Now I enter the trade. So as long as it fits my trade plan, then guess what? I'm going to trade it every single time. I don't care if I lose 3 trades in a row, because that's my trading plan. It's been working for me, and I know it's a high probable trading plan that I have as well. So if I lose 3 trades in a row, yeah, my confidence might be shook, but guess what? I'm still going to take that next trade setup that I see if it fits my trading plan. Just like playing basketball, I might miss 3, 4, 5 shots in a row, but if I'm open and I don't shoot that ball, it's the same way as me missing that shot anyway. So I have to take my shot every single time. So when you have a trading plan that works, a strategic plan that actually works, then don't be afraid to enter the trade. Have that confidence. That's why have that confidence every time you approach the markets. Have that swag every time you approach the markets. Now, if you come here, with a trading plan that doesn't work and you keep losing, then yeah, you got to switch it up a little bit. But overall, with what I do, it's just working for me, right? So you have to find out what works for you, because there's a lot of stuff out there when it comes to trading. Sometimes too much information is bad for you when it comes to trading. Does anybody else have any questions? What's the most simplest, most effective trading strategy for newbies should start with? Support and resistance. That's like the easiest. And I'm going to show you. I'm going to show you one more time real quick. Hold on. Check this out. Start on the higher time frames, like the 4-hour chart. Like the 4-hour chart. So start on the higher time frames, and what you guys can do is it's all about identifying like the obvious key levels in the markets. That's what it comes down to, just identifying the obvious key levels in the market. Start on a higher time frame, and you can switch it from a candlesticks and turn it into a line chart, and it's a little bit more cleaner, and you can see these levels of support and resistance. So if I was to take this level of resistance up here, price starting right here, I see price create a level of support, came up, create a level of resistance, create a level of support, came up, boom, create another level of support. Look what happened when price came back to that area. It dropped, came right back up and tried to retest it again, and it dropped. Price started to consolidate on this trend line right here. I can take another trend line and place it right here. And remember what I told you, I'm taking the average of these points, the average of these points right here. So basically what I did, I took the average of this point right here, and I took the average of this point right here. And now I have a zone. Now I have a zone. And I just extend it all the way out into the future. And look what happens. Price broke out of that zone, came right back up, retested the backside, dropped, came back up, gave it one last kiss, and it dropped. So just understanding these basic things of support and resistance, just because you place a trend line on your chart doesn't mean you have to delete it right away, because sometimes price is always going to come back and retest the backside. This is honestly the same thing I showed you guys on GBP AUD. This is the same as that thing. Price came down, dropped, retested the backside of this level right here of support. This old support is now my new resistance right here. It dropped. Don't go chasing the trade right here. Don't do that. That's where you get killed. This used to be me. Wait for price to retest the backside of that trend line. The backside of that trend line. And then this is the real move to the downside. Did that answer your question? Okay, perfect. Anybody else have any more questions?
My brother, you absolutely killed it, man. Like, thank you for giving us your time, man. You know, like, thank you for giving us your energy. Thank you for dropping just a ton of value over the last hour and a half, man. Yeah, if you guys are still pumped up and if you got some value, yeah, please give it up for this man right here, because Ray, bro, like, thank you. We got it recorded. We're going to give it to the rest of the squads as well, man. But we got people around that just really appreciate you, man, and we appreciate you. So thank you, brother.
Hey, thanks, Matt. Thanks for having me too, bro. I appreciate you.
Of course, man. Yo, guys, hey, take this value. We're going to get it recorded. I'll get it uploaded to YouTube. Ray, thank you again. Thank you, everyone, for hopping on. Look over this. Look at your notes, and it's just practice. I mean, this is someone who has lived an incredible life and has built it on this foundation. So please, guys, put in the work, put in the practice, and the value is here to grow. Thank you, everyone.